but gold and silver, we're fully invested. The truth is I was invested too early, and this is what often happens. When you're a value investor, you see value and you buy it, but sometimes you just have to be patient.
Well, it was fantastic to see you at the Rules Symposium, the Natural Resource Conference down in Florida, and it was a very interesting opportunity there because it seemed like we were at the bottom of the resource sector, the bottom for gold and silver, but all these mining companies were there, all these royalty companies were there, and it's like, wow, this might be the time to buy. And what you've done actually with your portfolio is you actually right now have the highest possible allocation to gold and silver. Can you expand on that?
Yeah, we're actually full on gold and silver. We have dedicated gold accounts where we are basically fully invested. And then we have global accounts where I basically got a full allocation on gold and silver, even though we're very underweight global markets and even other resources. But gold and silver, we're fully invested. The truth is I was invested too early, and this is what often happens. When you're a value investor, you see value and you buy it, but sometimes you just have to be patient. Certainly with gold, and even more so with the gold stocks, they have been extremely weak lately, much weaker than I thought they would be, frankly. Now, if I may just mention on gold, we need to put that in perspective. When everything else has fallen dramatically this year, gold is down about 5% as we're speaking, and that's after today's drop, whereas the dollar is up nearly 10%. I'm talking about for the year. So gold is holding up really quite well in the face of a stronger dollar. Now, US dollar-based investors may say, I don't care about that, but I think it's really important to understand that against pretty much every other currency in the world, gold is up this year, and in terms of some currencies, it's at all-time highs. It's really only in US dollar terms that gold is down because of the strength in the dollar. So I think that's a huge positive for gold, because it does mean when the dollar turns, and I don't think we're too far from that, when the dollar turns, gold should recover in dollar terms quite strongly.
It definitely does seem like that. Right now we're at multi-decade highs for the U.S. dollar, and that is putting a lot of pressure on both of the metals. But you see that reversing sometime soon?
Well, we know why the dollar has been strong. It's the cleaner shirt in a dirty laundry hamper syndrome. Every other currency around the world, however bad the U.S. dollar is, and the U.S. economy, every other currency and economy is probably worse, or not everyone, but the major ones: Britain, the US, Japan, China. And so the dollar's been strong because of that. The dollar's also been strong more recently, this year in particular, of course, because the Fed has been raising interest rates. I mean, frankly, they left it far too late and they haven't done enough. Maybe we'll get into that. But the Fed has been raising interest rates much more than Britain, Canada not so much, but Britain, ECB, European Central Bank, and of course, particularly Japan. So you look at Britain, for example, last month, the headlines in the paper were screaming, Bank of England raises rates to 1.25%. And they were talking about the huge hike that the Bank of England had just done. And that very same week, the Bank of England predicted that inflation would end the year at 11.25%. So you've got the bank thinking inflation is going to be 11.25% and rates are at 1.25%. So compared with other countries around the world, other central banks around the world, other major central banks, the Fed is actually raising rates, and that just increases the rate differential between the US dollar and other currencies. If you're a Swiss manager sitting in Zurich, you've got $100 million or $10 million or whatever but you just want to park somewhere temporarily, well, you can actually earn 0.25%, 0.5% on your US dollars, whereas in ECB, they're charging you to hold your money in euro. So it's an easy decision for global managers. If you've got cash, you just put it in the dollar. And that's where the strength in the dollar is coming from. It's not coming from central banks buying US treasuries. Russia, as we know, is completely out. Japan and China have stopped buying for quite some time now. And both of those countries, in fact, have been net sellers in recent months. So it's coming from people just looking for, where do I park my money?
First leg down from the beginning of the year for the first 6 months or so was we saw everything sell off, right? Even the precious metal sector, the mining stocks, as we mentioned, just a few weeks ago, it seemed like, gold and silver resource stocks were incredibly depressed. Do you see the same thing happening this time, where during this next leg down, it could be, again, a sell everything moment?
Well, no. Typically what you see as you get into a bear market is you start to see rotation. And we saw a little bit of that. As you say, everything was down. But if you look, you saw that the value stocks held their own more than the growth stocks. The defensive stocks like consumer goods like Nestle, Unilever, they held up better than the tech stocks. And I think you're going to see, as we get into the bear market, you start to see more rotation. The gold and silver stocks, to my chagrin, as I'm sure everybody listening to this who owns them knows, they did not participate in this rally, or to a very, very meager and short-lived extent did they participate in the rally. So the major gold and silver stocks are back to their annual lows, and in some cases lower than their annual lows. So I think what we need for the gold and silver stocks, we need gold to move up in US dollar terms. When you look at the gold and silver stocks, number one, they're making good money. We forget that. The margins are still are very strong. They're lower than they were in the first quarter, but the second quarter margins were still some of the best for the last 20 years. We forget that because we focus on the fact that every company says, oh, our costs are going up. Well, yes, their costs are going up, but if their all-in sustaining costs are $1,100 and the price of silver is $1,750, that's a wonderful margin for anyone in any business. Even tech companies would like that kind of margin. So number one, they're making money. And number two, the stocks are stupidly cheap. Again, you look at a stock like Barrick, it is second largest gold mining company in the world. It's got net cash, it's net cash positive, its dividend is 4.7%, it's earning stacks of money. There's no major warts on the company other than the fact that they have a lot of mines in politically unstable jurisdictions. But, their political risk is diversified, if you like, from the Congo to Pakistan and Saudi Arabia. So they have a lot of risk, but it's a diversified risk. That's trading at the lowest price to free cash flow multiple ever. Now, that just doesn't make sense when they're minting money. And the same is true for many of the large cap stocks. So, but I think what you need, so the setup, what I'm trying to get at is the setup for this gold sector is wonderful. Most investors are underinvested. People who are into gold are overinvested, and people like me, we're fully invested. So most people I know have too much in the gold and silver sector. But for the investment community at large, people are incredibly underinvested. Mutual funds are underinvested, hedge funds, institutions, hardly anybody owns any gold or gold stocks anymore other than dedicated investors. So the setup is incredible. What will make it turn, I think, is gold going up to 1850, 1900, 1950 and holding those levels. And, it's difficult to say when that's going to come, but I think certainly one thing to look for is when the market realizes that Powell and the Fed cannot control inflation without causing a serious recession. And the slightest hint we get that the Fed is going to pause for a significant period of time. They don't have to pivot immediately, go from QT to QE, but they're going to stop tightening. That'll be the turning point for gold, I think.